For decades, global markets have reacted sharply to political shocks, sanctions, trade wars, elections that rewrite policy overnight. And in nearly every case, one asset almost always rises above the rest: gold. Donald Trump's return to power in 2024, escalating tariff tensions between major economies, and widening geopolitical conflicts have brought back volatility to global markets. By early 2026, prices reached just above $160 per gram, marking one of the strongest multi-year rallies in history. In uncertain times like these, gold becomes what we call a financial bunker, a place to wait out the storm. But why? I'm Afzal Ahmed, and this is Aloud. This show brings you articles made for audio. In this episode, we've adapted the piece Why Gold Rises in Times of Political Upheaval by Hafsa Abdi Wahab Sheikh, published on TRT Africa English on January the 30th, 2026. Gold is often described as a safe haven asset. Unlike currencies, it is not issued by any government. Unlike bonds, it does not depend on a borrower's credibility. And unlike stocks, its value is not tied to corporate profits or economic growth. When political upheaval raises doubts about borders, trade routes, energy supplies, or even the stability of governments themselves, investors reduce exposure to risk. Capital flows away from volatile equities and fragile currencies and into assets perceived as stable and universally accepted. Gold fits that description better than almost any other commodity. But in stable times, that can make it seem sluggish. It pays no dividends, it generates no yield. But when politics ignite chaos, those traits become its strengths. Recent headlines underscore this pattern. Take the Brexit referendum in 2016. In the days leading up to the vote, markets largely expected the United Kingdom to remain in the European Union. But as results came in overnight, on June the 23rd, it became clear the UK would leave. The British pound plunged by more than 10% against the US dollar, one of its largest single-day falls in decades. At the same time, gold prices surged nearly 8% in a matter of hours, climbing around $43 per gram, their highest level in 2 years at that point. There was no sudden change in global production, no new discovery of gold. What changed was confidence. Fear alone can move markets, and gold has long been its refuge. Nothing pushes gold higher faster than a weakening currency. Political crises often trigger sanctions, rising debt burdens, and emergency government spending. To cover the shortfalls, governments may expand the money supply, eroding purchasing power.
Gas lines at many stations were a lot longer than normal.
Line today is longer than it's ever been.
History offers a clear example. During the 1973 oil crisis, oil prices quadrupled after an embargo by major producers. Inflation in the United States surged into double digits. By 1974, consumer price inflation exceeded 12%. Gold responded dramatically. After trading at just over $1 per gram at the start of the decade, prices soared to just under $6 per gram by 1974, a five-fold increase in just a few years. Unlike paper currencies, gold's supply grows very slowly, roughly 1 to 2% per year through mining. No central bank can create more gold overnight. Central banks understand this well. China has steadily increased its gold reserves over the past decade. Russia and India have followed similar paths. In 2022, Russia's foreign currency reserves were frozen following its war against Ukraine. Central bank foreign reserves are normally considered sovereign assets that countries can always access. This became a wake-up call for governments, that if foreign-held reserves can be restricted, then diversification becomes a matter of national security. In 2025, central banks bought gold at record levels, reflecting a wider push toward financial independence as geopolitical tensions continue. Beyond economics, gold benefits from something deeper: human psychology. For thousands of years, gold has symbolized security, from ancient empires to modern central banks. When fear spreads, investors often return to what has endured before. In Turkey, families traditionally buy gold coins for weddings and store them at home as savings. In India, gold jewelry is both adornment and financial security. Across the Arab world, gold remains a portable form of wealth, something tangible in uncertain times. On a micro level, it is the same instinct as in global markets. When trust in institutions wavers, people turn to something they can hold. So the long-term outlook. These political shifts are unlikely to disappear overnight. Trust in global institutions has weakened. Markets are adjusting to a world where instability is not the exception but the norm. Gold may not generate income, it may not innovate, it may not promise rapid growth. Gold may be old-fashioned, but history proves its value. In times when politics destabilize markets and money loses credibility, gold remains what it has always been, our most trusted asset. That's all for this episode of Aloud, based on the piece Why Gold Rises in Times of Political Upheaval by Hafsa Abdi Wahab Sheikh, published on Tiati Africa English on January the 30th, 2026. I'm your host Afzal Ahmed. Thanks for listening.